Amazon spent $1.2 billion on an acquisition last week of self-driving cars with the startup Zoox. Our next guest says that Amazon now needs to turn its attention to purchasing Macy's. Joining us right now is Dominic Rispoli. He is managing director at Lincoln International. And Dominic, you're going to have to sell me on this because I have a hard time buying this. You think they should buy Macy's outright, the entire company, not just a couple of locations or real estate places here or there?
I do. Well, good morning, Becky, and thanks for having me. I think it's a very compelling time for Amazon to really accelerate its brick and mortar penetration. And frankly, Macy's is an excellent opportunity to do so. And there are three reasons that I really think that's the case. One is it's a massive category. Amazon loves massive categories. They proved that in the Whole Foods acquisition. It could be transformative for them within this space. Number two, it could provide to them access to brands that typically don't sell in a very proactive way in Amazon. And I think that's a really compelling fact in apparel and footwear in particular. And then third, and perhaps most importantly, Macy's has a $5 billion e-commerce business embedded in its business. And wouldn't that be a very easy plug and play for Amazon to be able to really showcase?
Hey, Dominic, just to poke a couple of places around this, if Macy's were to be bought by Amazon, my guess is that a lot of those brands that you mentioned as one of your points why this would be good might give some pushback before they would actually see their brands sold directly on Amazon. That's been the case that some of those brands have not wanted to be on Amazon. They've had problems with them in the past. And then just looking at why you might want to, I'm not arguing that they don't need to get into bricks and mortar at some point, but if they were going to do it, would there be other places they could go? There's been speculation that they were involved with trying to purchase some of the real estate locations from JCPenney, and obviously Amazon's always looking for real estate. But I spoke with Jan Niffen too, and he said if they're going to buy somebody, why not Kohls? Because those locations, the Kohls locations, are already in the strip centers instead of in malls, which are still getting better traffic. They've already got a deal with Kohls where you can return your Amazon merchandise back. Why Macy's over somebody like Kohls?
Sure. So two questions there. I'll answer them in succession. The first one on the brands, if you're Nike and you have Nike's brand, I agree with you, Becky, certainly you have a lot of control over where you sell and how you sell your product. What I would say is most brands are not Nike, and they are, in fact, dependent on distribution channels like Macy's and like Amazon ultimately to really penetrate their customer base. If Amazon owned Macy's, that would give them substantial incremental power for many of these brands that are not positioned perhaps as well as Nike is. On your second point around the locations, I think that you really have to almost reimagine what the store can be under Amazon's ownership. So yes, of course, there would still be brick and mortar customers coming in and shopping, but I think Amazon could really use those as almost local distribution centers to penetrate apparel and footwear in the same way they did with Whole Foods, and create kind of a customer ecosystem, if you will, around apparel and footwear. Interestingly, if you really think about it, Amazon, at the end of the day, wants to be close to the customer on multiple categories, and I think this is a way to do that. Last point I would make is when they made a brick and mortar play in the food space, they bought a premium-oriented player, Whole Foods, and Macy's, I think, is very analogous to that relative to more of a mid-tier player. So I think there's many reasons why Macy's, in my estimation, makes more sense for them.
I know Macy's shares have come down pretty substantially this year, something like 70%. I think the stock is, what is it, $2.7 billion or something at this point. But they still have a lot of debt that they have too, maybe $5.7 billion in debt. So that would make it an expensive acquisition, not just looking at the stock.
That is true, but what I would say is Amazon has incredible access to capital. First of all, they have a cash balance that that was more than sufficient to do this acquisition and still leave them with plenty of dry powder to do other acquisitions. Secondly, they have a stock, obviously, that investors reward with a very high multiple, and they have very good access, certainly, to the debt and equity markets. So first and foremost, I think they could just simply do this in cash, with cash on their balance sheet. But even if they did have to raise capital, they have plenty of access. The other point I would make is adding Macy's. Adding Macy's to the Amazon fold. I think they could leverage that into a higher multiple, if you will, than what Macy's trades at today. So those sales, in other words, on Amazon's income statement are much more valuable than on Macy's standalone.
Hey, Dominic, have you heard any rumblings about this, or you were just kind of looking at the numbers and thinking that this made sense?
Just, I'm an M&A banker that covers the retail space, was just looking at numbers and really trends. And I'm always thinking about kind of where is retail heading. And it's very topical today. I think, frankly, all retailers are thinking about how do they accelerate their e-commerce presence. And frankly, all e-commerce companies should be thinking about how did brick and mortar play into their strategies. The reality is brick and mortar today is still over 80% of sales. So it's $4 trillion of sales are going through brick and mortar locations. And e-commerce companies like Amazon want to take a bite of that.